Gold, study gold. Again, go back, understand the days of the week. We'll put our weekly separator in here. Okay, day one took out the low of the week. So immediately when we see that happen and the market puts in a peak formation low, okay, just understand that they took out the high of the day, went into double zeros. It was an inside day on day two. Inside day, day two, in a broken down market, breaking down, and we'll explain that in a second. But the initial shorts get caught down low, trading Europe, London, Asia, whatever, breakout traders, whatever that may be, and they put 100 pips plus 200 pips into those traders that are short, but they break out of the high of the day. They break out of the high of the day, and this becomes a peak formation high. So we can put peak formation high on the upside because we have day two. We have day two now inside. Now you'll notice on day two, some traders got caught trying to counter trend this. They're inside. They're inside. The market breaks down through the low of the London session. That's a breakout. That's a breakout now of that higher level low. Okay, so they've split the box. Peak formations are up inside of that breakdown. Peak formations are up, and I've said this, you've heard me say this, when the market goes sideways inside of a low or a high, it's coiling for an explosive move. Do you notice they don't trigger the low of day one until after they put in a peak formation high right prior to the Europe open window? So these are things that you need to be looking at. We have day one. Day two's an inside day. It's an inside day. They just tap it. That's not enough, though, to trigger other time frame traders because we're inside of the low of the week. Peak formation high into the peak formation high. On the way down, a peak formation. That's our new high of the day in the U.S. session. They don't break that. They trade back up into it at 50 and break down in the London session for a 100 pip move down through the low of the week. Day one, day two, day three. We have inside bar traders short now. They put in the double bottom for the explosive 75 pip move back up, which several traders took this short squeeze today in the New York Open, myself included. But I received emails. This was an ideal opportunity for an explosive move. 1 hour down, second hour trades back into the low. Peak formation high on non-farm ADP. Okay, we have a low already in at double zeros on day three. 1 hour goes by and they do not break through the low. But do you notice where volume is getting trapped? Volume is getting trapped in the lower quarter. The volume's trapped in the lower quarter. 30 to 45 minutes in that second hour for the engulfment and the explosive move back up. 1 push, 2 push, 3 pushes for the continuation. When you see this on day three, you need to understand that they are not coming back down on this type of situation. All this volume is trapped underneath of 50. If they come back below there, they're allowing traders who are now underwater or who haven't been stopped out or who are holding on, averaging in, whatever they may be doing, or trying to counter trend this. They're not going to come back down because it allows them to get out of a losing position. The continuation trade follows back up because why? Day three, we have traders that are in the money in that London session, up at double zeros. So critical to understand who's in the money. Don't counter trend. You're down low on day three. They're not coming back down because that allows all this lower volume to get out of a losing trade. So you need to understand what your setups are. Keep it simple. If you don't see a setup, don't try to figure out and be a super smart trader and trade the moves. I know there's traders out there, they message me stuff. They got so much. Stick to one thing. Pick one thing, get good at it. Don't, spread yourself all over the place and get all these other ideas in your head. And it's about setups, scalable setups. Whoever traded London today made a killing. Whoever traded the U.S. today had an opportunity to make a killing. We had opportunities in the long direction. We had opportunities in the short direction. We had trend trades yesterday. We've had trend trades today, day 3. We've had level 1 trades on Monday. Great opportunities on gold alone, Asia shorts, U.S. session longs, 100 pips in both sessions. At least 50 to 75 of locked-in profitable trade setups in the 12-candle windows. So know what you're looking for. It's not about trying to trade every session or every move or the movements. It's about knowing what you're looking for in the session that you're trading, knowing when you can scale in with size. Okay, we talked about first red day, first green day. Level 3 trades, they're the ones that I size into. They're the ones that have the opportunity to go large moves. So keep it simple, master your setups, master the day count, then the session trades make sense. Whether it's a trend trade, a reversal trade, a scalp, a sizable trade, whatever that may be, you need to build your playbook. You need to master those setups. Keep it simple, traders. We've had just opportunities day after day after day. Keep it simple. Get better at them, 1% better every single day. Master the markets, master yourself, and may the markets go with you.